I'm Mike Cerrone with Mastermind Agent, and welcome to the Referral Mastermind Call, where we talk about how to get more repeating referrals from your friends, family, and past clients. All right, we got a great session today. I'm real excited for you. We're going to be talking about the current market and what's going on. We're going to talk about down market dialogues that you can have with your buyers and sellers. We're going to talk about strategies for what I think you should be doing in this market, how agents should be handling it, and some of the conversations you can be having with buyers and sellers, as well as your friends, family, and past clients. All right, we're going to be looking at some trending as well in the overall housing market. That's going to be in phase one. We always do a couple different phases here. Phase one is we talk about, I teach you something or I show you something. We can talk about that. And then number two, phase two, we talk about how you can get more repeat and referrals from your friends, family, and past clients. And we kind of open it up for an open Q&A where you can ask any question you want about that topic. And then our third phase, we open up for Q&A to talk about anything you want to talk about in your real estate practice. All right, so let's go ahead and get started with talking about what's going on in the current market. Let me get this set up. Just take a second. And trying to click a button there. It's taking a while. And there you go. You should be seeing my screen. And hopefully there's no blockage from this up. Let me hold on. Let me make sure that if it is, it's out of the way. Not that one. And there. Okay, maybe I'll get good at this eventually, but there we go. This is some information I thought you ought to see. This is talking about what's out there in the market right now on YouTube. I want to give you some resources if you want to kind of see what people are looking at and looking at overall arching trends in the market. This was actually a very interesting video. I recommend you go check this out. Only takes about 15 minutes. The name of it is 30% decline in home prices in 2023, question mark. And this guy goes into an evaluation of whether that may or may not happen and what his predictions are. This is a pretty neat channel for that, by the way. Reventure Consulting, I believe that's how you say it. But you can go check out his site and check out this video to see what's going on. And again, he explains what he thinks is going to happen there. Actually, it's one of the better videos I've seen for overall talking about all these different dynamics that are happening in the market. The other videos that are kind of interesting are this one. This guy on his channel is called RJ Talks, likes a lot of data, looks over nationally, but then he also focuses in on different submarkets. So it's pretty interesting. In this particular one, he focused in on the East Coast because the crash that people are talking about either occurring or already started tends to be in the west side of the country, which I'll show you in a minute. But now it's happening, of course, on the East Coast, and then it's kind of working its way into the middle of the country. That seems to be what's happening this time around. And so this guy kind of goes through some stats that he pulled off of Zillow, and let's see, home price crash starts on Zillow, housing market no this time. What's interesting to me, though, is this graph. Okay, this graph is showing a timeline. I'm going to see if I can open this up so you can see it bigger. It talks about a timeline going back to the 1960s. All right, so that's a pretty long time, 60 years. And what he's basically trying to show you is these peaks, troughs, and peaks, and what he calls peak to peak. And so the peak to peak in the market and what has happened historically and where they think we are based on trend lines. And by the way, this is all speculation. Who knows what's really going to happen? Nobody knows what's going to happen in the future. But this is kind of interesting information anyway. So we've got this peak happened back in the early 70s, and then it took 5 years to get back to the next peak. That was his point on this one. And then after that peak fell again during the 80s, and it took about 6.5 years just to get back to that pricing. This is not a perfect graph, but to try to get back to that pricing. And then after this peak here that happened in the 90s, it fell off, and it took 11 years to get back to that same price. That's kind of interesting and a little bit scary, right? But then it goes up here to the last peak before the Great Recession crash in 06. And this is, by the way, the overall U.S. market. And basically, of course, then it fell out That took, I think, about 5 years to fall down, which is an interesting number as well to be looking at. And then it took 14 and a half years just to get back to basically where it was. And if you see, he's not even quite there yet. It would actually be over here, which would probably be closer to 15 years. I've seen a couple different graphs, and I think the other one I saw was a peak to peak of 16 years. What's interesting for this is to see the trending. You'll notice up here at the top that it's starting to come down. It's starting to come down. Now, is that a temporary bump? Will we have some bear market rallies? And the answer is probably yes. But that's an interesting trend that you should be aware of, because the media, of course, is starting to talk about it. Your clients are going to be talking about it. Your past clients are going to be talking about it. Your friends and family are going to be talking about it. And you should be prepared to know what to say here, and at least look at trending. And so here again is a resource for you to do that. So I'm going to keep going. What else do we have for you? This was another interesting graph. It's the same video as we showed you in the very beginning, but I wanted to just kind of show this graph of the US and what's going on. It's kind of interesting because just about a month ago, what we saw was a lot of red, which is things are falling. Over here in the western part of the US, there was a little bit of red falling here on the East Coast, south and then north. And then Austin has some falling down here as well. And in the middle of the country was more blue because it was still staying pretty flat. But at this point, now we're starting to see some declines all across the U.S. I don't know if you felt it in your market yet, because real estate markets are, they're all independent. They're all local. Real estate is a local phenomenon. However, we have these macro events that occur, such as interest rates being shot up and being doubled. And also just the bigger macro, which is we've been in this expansion mode for a really long time. And so what's interesting is you can look at some of these graphs and you can see exactly how far each of these communities have moved as far as their decline, or whether they've stayed flat. Some of these graphs will show relate it back to prior to the pandemic boom that we kind of had, and trying to see how close we are to get back to that. That's where a lot of these people are kind of looking, these pundits. Oh, hold on, I gotta get this out of my way so I can show you the next thing. All right, this is kind of interesting as well. Again, I'm not going to go through all the videos. I just want to give you some resources to check out. This guy, Jason Walter, is another interesting guy. He likes to give a lot of stats. If you like stats, this is your guy. He really lays out kind of reading the stats. By the way, all these folks give stats. The others give a little more. It's a little easier to look at because there are more pictures and graphics. But this guy just kind of lays out the stats. Anyway, he says that 80% of California counties have posted a decline in home prices from a year ago. And that is what we're seeing from a lot of these resources. Saw one the other day with different counties where these different counties had fallen. Some of them, by the way, haven't moved at all yet in California, but a lot of them have moved, like even LA, I think was down 10%. I hope I had that right. Up in San Francisco, there's been a lot of fall. So it's like there was 5%, 10%, and then there was like, of course, 15 and 20. I think the San Francisco area was around 20 or 25. 27 is ringing in my head for some reason. And some of the counties around there were even as low as 33% off their peak. And that peak happened in June, just June of 2022. So there has been a lot of movement across the country. Whether you felt it in your market or not, I don't know. We, of course, can talk about that, but it is kind of interesting. And sorry, I got to move that out of the way again. And this, here was the other one, I guess, was talking about California. This gave an example. I can't remember which county this is. And again, I'm not going to run the whole thing, but you can see a 33% drop. And that's just from June of last year. Now, of course, they got a very high average price. This was probably in the Silicon Valley area. But it's showing you that things are really changing. It's not just hyperbole. Things are actually moving in a lot of these different markets. And again, if you're in that market, you can now explain a little better. If you're not, you can see kind of the wave that's coming that may be here. Again, things could turn and change and whatever. I get that. And you should advise that to your people as well. But you cannot deny what's happening out here in the market. Got to be aware of it. Some other things, builders are reporting massive cancellations. Some builders were as high as a 68% dropout in contracts, where buyers were dropping their contract and not moving forward. Redfin, let's see, what was this one? This was investors. This was investor purchases year over year, 46% decline. So investors are not buying anymore like they used to because they realize the market is moving the wrong direction for them to make a quick buck. And so they're not buying or selling or pulling out. That's creating a movement in the market. And then last thing here I wanted to share with you was just a recent thing. I think it just came out today, where they're expecting the Federal Reserve to raise interest rates another 75 bit points. What that means is a 75% of 1%. Okay, so if you're at 6%, it would go up to 7.75%. And that does affect mortgage interest rates. People can say it doesn't, but that's ridiculous. All these things are based on the Fed funds rate that starts everything off. That's the rate that banks can exchange money overnight between one another. And so that kind of sets the interest rates in the market and fluctuates up. And then they add risk base to decide what the interest rate would be. So, if you're a risky borrower, it's multiple much higher. And if you're a super secure borrower, then it's very close to whatever this thing is, just plus a few for the bank to make a little bit of income. Anyway, I just wanted to show you that you got some resources out there that you can be checking out about this market and see what's going on. All right. So what we're going to talk about today is, hold on just a sec. I want to put up my quick notes so I don't forget what we were going to be chatting about. All right. So we've got, and by the way, I'm going to open this up for Q&A in just a minute. I'm just trying to get you some information to get us started. And what I'm going to also try to share with you some ideas for some down market dialogues, what to say to your friends, family, past clients, and current buyers and sellers about the state of this market. I just showed you some pricing trends and some resources that you can use to see what's going on. And of course, most importantly, what's happening in your local market. So check out your MLS. For instance, in the last big crash, I'm here in Denver. We fell probably about 10, 15% in the Great Recession, whereas not very far from us in Phoenix, Arizona, they fell 50 to 60%. So markets can react differently, but notice the mega trend was that things were going down and we felt it and they just felt it more. So you're probably not going to escape this trend wherever you are, but it may be lower or easier on you in your particular area than some others, like the Midwest, because the prices never really skyrocketed. They don't have as much to move down, and so they're probably not going to feel as much of a change. Who knows? But that's the expectation. All right, let's go. Agent strategies moving forward. Where's the opportunity in this market? How can you position yourself up to win? I'm going to come back to that. Let's go back down to down market dialogues. And by the way, I'm just going to try to make sure I see if anybody wants to get in. I kind of messed that up last week. All right, so we got down market dialogues. And what are you going to say to your friends, family, and past clients and current buyers about this market and what's happening? So my answer is be honest. Just tell them what's going on and what you know. The other thing is to just make sure that you don't make any statements of fact about the future, because you don't know what's going to happen. Just keep that in mind as well. And you can use examples from your experience. So for instance, in January of 2020, the pandemic was starting to come in. Nobody knew what it was. Everybody was scared. For that first quarter of that year, everybody thought the market was going to crash. I mean, everybody expected it, myself included. Everybody thought the market was going down. It started to look that way, probably for the first 3 to 4 months, 5 months of the year. And then it kind of turned, right? People were at home and they decided they wanted a bigger house. And then we got stimulus checks and all these things. And the market just went up. Totally unexpected for what happened. And we might experience that again. However, boy, again, it's going to have to be a really big change, like the market stimulus from the government or interest rates going way back down. It's just hard to picture what that would be. but it's possible. And you've got to tell people that, you got to pepper that into your conversation with them. The best thing is to try to show them the trends that are happening in your local market. Go in your MLS and get stats and try to get graphs. Like I showed you a couple graphs earlier. Try to find some graphs like that, or not just you show today's graphs, right? Then show like compared to something. It has to be relative. So show it to a month ago, a year ago, 5 years ago, 10 years ago. And if you can get one of those trend graphs from your MLS, or even if you have to go to the state, sometimes your your state association of realtors will have a bigger graph for your area to kind of show the trending. That could be helpful for them to kind of see what's going on in the market. Remember, buyers and sellers will be moving. It's just that the buyers and sellers are going to move now are the ones that have to do it, okay, that have to do it. And they have a need to do it. I've been doing a little experiment on the side, and I was actually just chatting with a gal earlier today, and she and her husband are living in a 2-bedroom, 2-bath apartment, and they just had a baby, and they got another one coming, and boy, they need some more room. So they've got a need that isn't going to be met unless they buy a home, or they've actually been talking about renting a home, because that's something I look at now is the difference between what's the cost of rent to the cost of ownership. And by the way, that's why I actually think the market is definitely going to start sliding even some more, because that's out of alignment. Affordability is out of alignment. If you look in your area, always look in your area, but you can look nationally as well, or your state. Look at the difference between the average price to rent and the average price to own. And when it's this way, that's good. People are going to be buying like crazy. But if it's this way, and the average price to own is way higher than the average price to rent, that's where things are out of alignment. A lot of markets are that way, where that difference is 500, 1,000, 2,000, depends on the market that you're looking at. It can be extreme. And in that case, you might need to advise people to rent. And maybe you need to become a rental agent for a little bit and help them rent properties, because it's in their best interest, even though you make a lot less on those transactions. However, you should consider doing that, because your job is to protect your client and take care of them. And then they will take care of you, and they will tell all their friends you're the most amazing person because you recommended something counter to what the rest of the market was recommending. Anyway, know what these trends are. Talk honestly to people about what's going on. That's the biggest thing I can tell you. Try to show them information that could be helpful, and try to get stats on your local market. Like here in Metro Denver, we had the peak. And by the way, most of the country had the peak. This is a good thing to know. The peak in June of 2022. June of 2022 was pretty much the peak before interest rates start to move up and things start to change in most markets, where prices start to come down. Okay, prices started to kind of come down after that. Was the peak of price for most markets was again June of 2022. You might want to write that down and keep that number. And then look at your local market, see if that holds out to be the same. At that point, here in Metro Denver, we're only 7 months away from that. We've already fallen 14% in home prices. I think it's 14.6, but that's a pretty good decline. And if you do the math, here's the next step. You take the 14%, you divide by the number of months. That's basically 7 months, so it's 2% drop per month. That's something good to know. That's something you can share with people. That's something you can look at a trend line. Again, it's not necessarily going to continue, but it might. And if it does, what does that mean by the end of the year? That means you're going to have depending on your market, that could be another 20% drop in my market. And by the way, then you look at those historical maps and you can see that might drop prices down to where they were pre-pandemic. That's kind of where a lot of people are looking. I don't know if that's low enough if you look at the long-term trend, but just to get back to the pre-pandemic numbers, they would have to go down quite a bit, because most markets shot up about 20% a year, about 40% in total. Know what your local market did. That's pretty important to know and to be sharing with people this historical data. Do not try to snow people. Do not try to tell them a fib. They're going to find you out. They're going to see it in your eyes. They're going to find it out later. And your reputation is mud. Do not do that. Even, no matter how desperate you are to make it, you're better off becoming a rental agent, or again, just focusing on people that have a life change need, a birth in the family, a death in the family. They get married, they get divorced. They have 17 more. I already said it, kids. They get relocated. They lose their job. They get a job. There are all kinds of reasons that people, they actually want to move in the market independent of what the long-term trends are. The other thing you should have in your conversation for any buyers is, we don't know what the market's going to do. This should be true of all times, by the way, but we don't know what the market's going to do. It might go down. If you are a long-term owner, we're talking 10, 20, 30 years, everything's going to work out. Look at all these trends. It's all going to work out pretty good if you have a long-term perspective. If you're a short-term buyer trying to buy and sell in just a year or two, not a good time to buy. Very risky. And by the way, that's again true even when markets are moving up. It's very risky because you don't know what the market's going to do. These are the dialogues you need to get into with the buyers and sellers. Now, if you get a buyer that absolutely wants to buy, cool. I just mentioned some of the things you should talk to them about. How about we have a seller that needs to sell for whatever reason? That's fine. That's an interesting conversation. You want to show them these trends. You want to show them if your market is falling like mine is. And I know it's falling at 2% a month. I'm going to find out what today's current value of their property is. But remember, I'm looking at historical data. That data is going to be 1 to 6 months old on the pricing of their home. I got to tell them that. I got to discount the price down to where it should be today. And then I got to go a step further. I got to say, look, it's probably going to take 30, 60, 90 days to find a buyer. The longer we wait, it's going to fall 2% every single month, the way it's trending. And so just for simple math, if you're sitting at $500,000 for the value of your house, a 2% hit means a $10,000 loss every month. So if Mr. Seller, Mrs. Seller, if you don't make a change right now and position yourself well, you're going to be taking a $10,000 hit every single month that you don't make a move. That is not fun and not very wise, because let's say it takes you 6 months to sell this home. That's 60 grand less than you could have made if you just would have taken a little hit now. You could take a little hit now or a bigger hit later. That's what's going on. And we call that the stair step down concept. That's what seems to be trending. Will it happen? I don't know. But you tell me. I've shown you all the graphs. You understand what's going on in the market. You feel it as well. What do you think we should do? Most sellers, if they're logical, they're going to say, you know what, Mike, what do I need to do? Do you think I need to go down a little bit below? And my answer is yes, because you want to beat out all the other sellers that are sitting there in the market today. They're looking backwards. You need to be looking forward. Okay, if you're looking forward, you're going to be able to beat them at this game of getting your home sold. If you can get your home sold now and just get a little bit in front of them, boom, and get it sold, boom, you're going to get a better price today than they're going to get in 3 months, 6 months, a year from now when they finally wake up and decide that they need to make an adjustment. Hard to say price reduction. That people don't like that, so you say price adjustment. These are the conversations you need to be having with sellers who are serious in this market right now to make sure that they're aware of what's going on and they feel it. And they're going to say, oh, yeah, but I heard last year things were flying or two. Yeah, they were. It was a different market. In that market, you do a little bit different. You price a little bit above the market because the market's going to catch up to you. That's pretty cool. We're not in that market anymore. So I like contrast, by the way. I like contrast in these conversations. Today's market is different. Look at all the trending I just showed you. It's falling. And in Denver, we're falling at 2 points a month. You're losing 2% of the value of your home every month. You said you need to be gone, right? You need to move. By the way, don't move. If you don't need to move, don't move. By the way, I love to throw that out. You're scared to say that because you think they'll decide not to move. They've already decided they're going to move. So just say, hey, don't move. Don't move. It's not a good time to move if you want to catch a big wave. However, we are at this nice peak. Maybe you get a lot more than you would have got 2 years ago, and a lot more than you might get in 2 years from now. Maybe today is a good time to sell since you're thinking about selling. It's just that you got to position yourself in the market to be effective and get your home sold. See, that's the other thing you need to look at. A lot of these graphs I showed you earlier, they're showing trends of active inventory. Inventory is growing. You're hearing around the country because of certain markets, especially the Midwest and some of the Northeast, where inventory is really low. And that's true. It has been super low. But if you look at the trending, say what's happening now versus a month ago, 6 months ago, et cetera, even if you go year to year back, in most markets, the inventory has grown exceptionally more than it was. Some of the ones I saw maybe like 1,000 homes were on the market in January of last year. In January this year, they got like 5,000 or 6,000. I mean, it's a dramatic increase. So you need to look at that, see it, and present that data. And again, most people are not number oriented. So if you can put it in a graph where they can see a picture of that, it's going to help a lot. A trend line. So we're talking about a time graph where you got price on the y-axis, you got time on the x-axis. That's a real effective one. So get your data and stats and then see if you can put it on a graph, either through Excel or ask the MLS if they've got that. So those are some of the dialogues I'd be having with people out there in the market. I hope that's helping. And again, we'll open up in a little bit and see if you've got other ideas. I'll hit this last topic real quick, and that is some strategies moving forward. If we are in fact in a down moving market as appears to be, and if it's anything like what we went through before, so I've been in this for 30 years, so I've seen a couple of these movements. If it's like it has been before, it could take a long time to go down to the bottom. See, the real estate the stock market moves really fast. The bond market, they move fast, but the real estate market moves slow. Okay, it's took us 6, almost 7 months to realize things are sliding, and then you have to look at your market and see, well, did it slide 5, 10, 15% in my market? Some of these markets, again, crazy numbers, 20, 30%. Find out what's happening in your market. But if you look at it, a lot of times it's still not going to happen that fast. It'll happen over 2, 3, 4, 5 years seems to be realistic, and 7. In fact, way back in business school, I learned the 14-year cycle, which was 7 years up and 7 years down. I remember hearing my professors say that and go, is that real? And now if I look back at the trends, it's actually pretty close. Now, it's not exactly 14 years, but some of them are as little as maybe 7 or 10 years. Some are as long as 15, 20 years, but they tend to fall in that cycle. That's why you got to look at what's going on. And again, share that with your people. Where are the opportunities going to be? The opportunities are here. Number one, reach out to all your people. Stay in front of them. Keep them informed on what's going on. Be the expert in the market. You should be putting out market statistic information, because so they go, oh my gosh, Dave is the expert. Hillary is the expert. Vivica is the expert. They're going to say, these people know what is going on in our market today. I need to call them because they can help me figure out what to do in this situation. And you do know what to do to help them in this situation. So it's the right move. Keep in front of them, because most of them are not going to move. I've been talking to agents where, they had a bunch of people that wanted to move this year and they don't want to move now, right? They just don't want to move. They already locked in on a low rate on their current home. They don't have to move. And so they're not going to move. So a lot of your list is going to be in that position. Cool. Just stay in touch with them, because remember, they can always refer you to somebody else. So stay in touch with them. But there are going to be people in that list that have to move. I mean, they're expecting 4 million transactions across the US this year. It's not 6 million like it has been, but still 4 million, a lot of people still moving. And since a lot of agents are probably going to be dropping out of the business, you're still going to do really well if you stay focused and stay in the game. Okay. So number one opportunity is stay with your PCSOI, your past clients of sphere of influence. Do not stop marketing to them. Stay in front of them. That is your bread and butter. That's going to help get you through this. That's number one. Number two, what's happened in other slow falling markets? You should look back in time. Where were the big opportunities? The opportunities were in REO. You might consider starting to position yourself in that market if that's something you think you'd want to do. The other is short sales. You may start to figure out how to learn how that short sell process works today in today's market. Those, by the way, I don't think are going to play in for probably another 6 to 12 months, just because it takes time for things to work into that situation. However, if things keep on this trend, that's going to be the hot markets. The other ones would be for sell by owners and expireds, because they obviously have a desire to sell. Okay, expireds not only have a desire to sell, they're willing to pay an agent. They just had a bad experience. You're going to be the one that comes in and gives them the straight scoop. Like I just gave you an example of, don't look at the past. Don't even look at the present. Look at the future and try to anticipate where it is. You're going to be different than other agents who are trying to feed them smoke. Okay, and by the way, you should use that kind of language. Don't say names, but say other agents who feed you smoke and they try to blow it, where. And I'm going to give you the straight answer. Okay, and then you have to give them the straight answer, right? So Anyway, those are the opportunities there on the sell side. On the buy side, if this market continues, I think the opportunity is, if you look at past markets, they're going to be in investors coming in to swoop up those discounted properties. Again, that's probably not going to happen for another 12 months or so, because prices are going to have to come down for them to start to make sense for them to buy and to get a mortgage and be able to cover with rents, right? So once those numbers, that's why you got to look at that number between what is the average home payment and what is the average home rent. And when they start to come in alignment, boy, now we got conversations we can have with investors. In fact, you ought to be reaching out to your PCSOI saying, hey, I know you don't want to move. Have you thought about investing in some property? Look at this property I just found where the payment is X and the rent is Y. And boy, now you can make some money on this thing again. It hasn't been this way for a while. I think you ought to check it out. What do you want? Would you like to learn more about this? Or do you know anybody who would? Great conversation to start. Call them up, send them email, etc. You're showing them an opportunity. So you got investors that are going to be coming in the market. The other group, by the way, is first-time home buyers. First-time home buyers typically is around 40% of the market. And during our hot, crazy market where things were so insane and other get rich quick people were coming in, that part of the market got shrunk down as low as 20%. Well, it's going to spring back up, okay? Because these people don't have a home to sell. They don't know what interest rates are good or bad or anything. They just know that there's rent is this and a home payment is that, and can I make it work? So again, I think over the next 6 to 12 months, those folks are going to have a great opportunity to move in the market. You should be positioning yourself on all of these opportunities, or the ones that look the most interesting to you today, to get yourself in their mind. You don't want to be the last one they talk to. You want to be the first one they talk to, so they think of you when these opportunities come up. So you're going to start working these markets and being in front of them. Like if you were going to go into REO, you want to start making relationships with banks, right? If you're going to do short sales, you already are making the relationships with your sphere, people that most likely that have to do this if it comes down to it. But you're going to want to learn how that market works and maybe put out there that you're learning about it. I'd wait on that one actually, but you get the idea. You want to get that going in the background now. If you want to work with investors, start take a CCIM class, right? To learn all about investor analysis. Get that going right now. You want to work first-time home buyers, learn about the first-time home buyer programs in your area. There's some really cool ones out there that you may have not known about because you haven't been working that part of the market. Go meet with those folks and those groups, talk to a great lender, make sure you have a lender that knows about those programs because they don't all do that. And then you can kind of combine those. A lot of your state will probably have a program on that with first-time home buyers with low down payments is usually the situation. Sometimes subsidized interest rates, all kinds of interesting things. But your state, your counties, and sometimes even your cities, especially a big city, will have some kind of program to help first-time home buyers get a more affordable home, or at least get a more affordable down payment, or combination of the both. So these are the things I think you should be doing in this market. I've been blabbing for quite a while. Let's do this. Let's open this up for dialogue. If anybody would like to throw in their 2 cents about what I said, and I'm looking at notes. Vivica, I appreciate you missed the first couple of sources. I'm recording this, I think. Never know until we get to the end. And so if it's recorded, it'll go up on YouTube channel, which is Mastermind Agent Network, and then also go in our Facebook group, which is Referral Mastermind Call. So you can see them there to get all those resources. But let's do this. Let's open up. Do you have any comments about what you think is going on in the market, where you think it's going, how you think you should strategize for it, or what you might be doing? Is there anything out there that you would like to share with the group? If so, go ahead and unmute yourself and let me know what you think.
Mike?
Hey, Hillary, how are you?
Oh, good. Can I just ask what you meant by subsidized interest rates?
Yeah, so what happens is some of these programs out there, what they're doing is they're discounting the interest rate at some level, okay? It just depends on the program, but they may be either holding these loans in their own portfolio, so they can do that, or they're selling them as a package out in the market. They're putting together a mortgage-backed security grouping with a lower interest rate. And so the investor recognizes that these are first-time home buyers and that they are getting a slightly better interest rate than is in the market. You may come across that. And that's what I was talking about, where they're subsidizing. You'll also find this, by the way, in some builder transactions that are happening right now, new home construction. Those folks are really desperate to get their inventory off their books because they've had so much fallout. They are very open to buying down interest rates, either short-term or even long-term, depending on the program, like a 1-1 or a 2-1 buy down, even a 3-1 buy down. Sometimes they'll just do a discount point and knock it down a half a point over the life of the loan or over a certain period of time. Again, there's a lot of creativity going on out there to try to figure out how to make this more affordable for your buyers. Did that help, Hillary?
Oh, it helped very much. And I was just wondering one last thing, then I won't take your time.
Oh, take my time. I'm here for you.
If I wanted to reach out to builders, when I say how do I find them? I mean, I see what comes up on the MLS. Obviously, somebody found them first. How do you go about that?
Great question. Great question. In the old days, it used to be a lot harder than it is today. But you're correct. The first place would be to look on the MLS, because that's what's happened, right? When the markets get really hot, builders say, we don't need agents. They've been doing that my whole career, right? They say, hey, we don't need you guys anymore. Buyers are falling over to get into our housing projects. And so forget you agents. We're not going to offer you commission or pay you any commission. And then when things get soft, like they're doing now, they're like, whoa, agents, come back. We love you. It's been so long. We want to pay you as much as you want. I've heard of agents, by the way, in markets, and this is very recent, where builders are paying full commission, double commission, and even triple commission on some transactions. See, the builder is the seller, so they have a lot of flexibility in what they can do. They can move the prices around. They can offer massive concessions. They can do a lot. In fact, your limitation is going to be on the loan side with how big that concession can be. It's usually around 6%, but talk to your lender, because there are certain programs where it could be even more, where you can finagle some of those advantages in a different way. As far as finding the home builders, the best way, of course, is to look in the MLS. You'll find that fast because they're already offering some kind of compensation. Next is to look at, you could go online and just say home builders in your city, in your town, in your area. Just type it into Google. They're going to start popping it up. Just pretend you're a buyer. I want to buy a new home in blank. I want to buy a new house in blank. I want to buy a new condo in blank. I want to buy a new townhome in blank. And blank is your city or your town. They're going to start popping up. You're going to start identifying them very fast, and you'll build your own list of people. The other thing to do would be to go to the Home Builders Association in your area. They're going to have a list of all the home builders as well. And you can find out what's going there. And then just walk up to their offices and say hello, or call them on the phone and say hello and say, hey, I'm a local real estate agent. I'm working with a buyer who's thinking about buying some new construction, or I'm just looking for buyers who I want to start working with on new construction. Where are you? What kind of projects do you have? What kind of special offers do you have right now? Because I'm looking at putting some buyers into some new construction homes. How can you help me? They're going to be like, come on over here. Oh my God, we love you. Where have you been all of our life? Right after they just pushed us away for the last several years. But it's okay. Let them bring you back in, because now they're going to pay. They're going to pay big. Don't be scared to ask for prices, price reductions, to ask for huge monster concessions, and to ask even for bigger commission splits. They are going to pay whatever to get out of this pickle that they're in. Remember, these home builders, they went out and borrowed all kinds of money, usually on variable rates. They borrowed all this money to build these houses. Then they sell the house and they pay back the loan and they keep the difference. Well, as this market has changed, their interest rates have been going up on their carrying cost on these homes. Their loans are getting much higher interest rates. Instead of being 2 or 3 or whatever it was, now it's 5, 6, or 10, and they're getting crushed in the middle. So they know they got to get rid of the home. They are a business person. They got to get rid of these properties, get some cash, and pay down that debt. Otherwise, they're going to go under. So that's why they were the first to move. in the prices. They saw the price change first. They made the first moves, and they're going to continue to be the most flexible, especially if they have existing inventory sitting there. Did that help, Hillary?
It was great, and the whole seminar today was excellent. Thank you so much.
I appreciate that. Thank you. I tried to think of a topic that would be helpful. And I know everybody's trying to deal with this situation and what to do. So let's do this. Let's keep going. Does anybody have anything else that they would like to add to this idea of our market shifting, and either a question about it or an opportunity you see? If you do, go ahead, unmute yourself and let me know. Okay, well, we're going to keep going then. That was phase one. And phase two, we got three phases. Phase two is repeat and referral. This is where we open up for an open Q&A on repeat and referral. If you have any questions on what you're doing to reach out to people and get more business, or something that's working, or something you have questions about, a plan you have, anything along those lines on repeat and referral, now is the opportunity to open up, let us know, and let's chat about it. So just unmute yourself and let's hear what you're thinking. Okay, no problem. Let's do this. Let's go into phase three. Phase three is open, just completely open. We can talk about anything you want to talk about in your real estate practice, anything at all that you are curious about, struggling with, or have something you want to share that's positive, anything that you would like to talk about your practice, just any concept at all, anything, completely the range all over, anything you want to chat about, go ahead, unmute yourself and let us know what you're thinking. Okay. Well, Dave, how's Canada going? I see up there. How's the Canadian market? Are you guys experiencing the same thing we are down here in the US? I usually get some good info from Dave, but maybe he stepped away for a minute. Vivica, you got any questions for us today on your business or anything you want us to chat about?
I'm here. Just had to find.
Vivica.
No, I think what you were touching on in our first phase, really getting a good handle on just being able to provide and be that go-to for the economic information, better learning it, and the navigation tools that you provided for garnering that information.
Yeah.
Is really what I have been digging into personally. So that's really where I'm at with that. If you can just always, when we have these sessions, just kind of touch on that, just on a more regular basis, as I'm not sure if anybody else is trying to get this information internalized, but just to keep giving that so that I am able to properly keep a perspective, or shall I say, develop a perspective from all the information that I'm garnering.
Excellent. Vivica, let me just give a couple quick thoughts that I have on that. One is check out your MLS. Make sure you're checking out your MLS for their stats, because they have a lot prepared usually, and they have already prepared reports and you can modify. So that's like a quick study and something you can show real quick to a buyer, seller, or your people. And then the next one is the Association of Realtors. If you go in, especially your state, but probably your local too, but I've seen it at my state level where they create a report once a month on the state of, in my case, Colorado, and they're showing all these graphs and all these data points and stats for listings and buyers, and they even go into rentals and landlords and tenants and all kinds of data information that would be very helpful. And again, they break it out into a graph. I've been recommending to people, by the way, that they take that information and they either screenshot it and or do a link to it and send it out as an email to their people once a month. You understand what I'm saying? So this information is for you. You paid for it. You're a member of the Realtor Association. So all you got to do is attribute, I'm trying to remember the word, attribute it down at the bottom, like where I got it, and then you share the report. So it's often a PDF, for instance, that you can download, or you can do it in a photo format, JPEG and so forth. You can put that into your own format for a nice little email that you send out. If you want to create your own newsletter, you can just do a link to it. You can just refer to a couple things like teasers and send the link over. You could have maybe just the first page in your email. There's all kinds of stuff that as a marketer, you can kind of think of, how can I get this out to my people, this information I think that they need, and this trending. And remember, since you're presenting it, you become the expert. Let me show you something as an example. This is really good on this one. Let me go back just a sec if I can find it. This guy right here. Hold on. I wish I was better at Zoom. Let's see. Where'd my Zoom go? Almost there. Almost there. Let's see. I'm going to share something again. Can you see my screen? Hopefully you can see the screen. This guy right here, Jason Walter. Check out his channel just for the simplicity of it. Watch one or two of his videos. His name is Jason Walter. He's in California, but he does these videos for different markets. I think he sends referrals back and forth or something else. All he does during his video is he reads off stats from the state reports. He just gets the state reports, and I'll kind of flash it up here a little more. Maybe I don't want to run the video, but I want to show you.
Increase compared to last month.
Oh no, it went to a commercial. Oh well. Anyway, all he does is he just shows. Oh, hold on a minute. All right, YouTube wanted to play a video there. So all he does is he just talks about the stats in his local in the state, and he pulls the stats, and he just for 20 minutes he just talks about it, and everybody thinks he's the expert. I don't know if you noticed, he had 80,000 people following him. 80,000 people. So he just put up a YouTube channel where he talks about stats. It's so freaking boring. If you're not into it, it's boring as hell. But he now has positioned himself as the expert, right? You got to go watch one of his videos. Really incredible. You could do that though in your market, right? You could say, you could just make this up, but the state of the market in blank, like I'm in Denver. Or you can even do like a suburb or wherever you're at. But the state of the market in blank, if you're in the metro area, do the metro area, because then you'll pull in even more people. But don't go beyond that. The more niche, the better. Don't say the state, say your area or your city. Like Dave's up in Toronto, the state of the market in Toronto. And then he just goes through all these data points, right, with all these people. And you become the expert. And you don't have to do 20 minutes. He does 20 minutes. You could do 3 minutes. And look, you make that video, you post it on your site, and you send it out to your people in a link for your email. Now you've talked to your sphere of influence, your PCSOI, and now you're also going to try to bring in new people. Just make sure, if you do that, to do some kind of call to action in your video. Hey, do you want a market analysis to know? Are you thinking about selling your home? Would you like to know the value of your home in today's market right now? All you got to do is blank. Okay. And you could, what I recommend, by the way, is you put a link down below in the show notes. You say, hey, just go to the show notes down below, click a link, and you can schedule a call with me. I'll just give this information to you one-on-one, and we'll get it over to you. Just go ahead down there, just click a link there, and you can get a schedule a time that works for you. And what you do is you have a Calendly link down there. right? And they click it on set. A lot of agents doing really well, or did really well, at least with a relocation through YouTube by doing that. They do a call to action with a link down in the show notes. So you're just doing a spin on it, and you're going to do your local information. By the way, you're probably going to pick up some relo. You're going to pick up some local people. Most importantly, your people are going to love it. Your PCSOI are going to be like, oh my gosh, Vivica is the knowledge queen. She knows everything. I got to call up Vivica right now because I've got this problem and she can help me solve it. Get it?
Get it. Thank you.
Yeah, you bet you. You bet. Hope that helps. All right, Dave, I see you're unmuted. You're back. Tell me what you're thinking. How are things going? I can't hear you yet, Dave. I can't hear you. I thought you were unmuted, but I couldn't hear you. Maybe you got to turn your volume up or something. I still can't hear you. Oh, no. Dave always has good info for us from the north. Keep playing with it, Dave. Keep playing with it. When you chime in, we'll talk. Hillary, where are you at?
I'm in Westchester County, New York.
In New York. All right. New York is kind of interesting, right? You got real expensive places and less expensive places. Where you're at, what's the average home price?
Well, the interesting thing, the prices in Westchester County specifically, not the city, we're around 600, but there's all ranges. The thing is that you hear on TV the doom and gloom and the sky is falling. And I was just in my second bidding war, which I don't think I'll get this one. In the last few weeks, we are seeing still crazy high, and rentals are off the chart. Rentals are ridiculous. So what you said about investors, that's the opportunity, because they can
look at your local market. I'm so glad you're saying that, right? And you sounds like you're analyzing that, and you've identified that you think investors are going to be still a hot group because the rents are so strong
and continuously growing. And with the higher interest rates, the lower tier buyers are deciding maybe I'll wait or I'll rent, and it's bringing more people into the rental market with less inventory.
Right. Do you work the rental market? Do you work as a leasing agent also?
Yes, and not by choice.
Right.
I was drafted. It just happened that way. And during the pandemic, I wound up doing so many. It became really easy. I mean, people were renting from videos, and very poorly done videos.
Sure.
And taking anything and everything. And now they usually took a 2-year lease or so. And now all these leases are due and they don't want to rent or they want to change. And so I have such an influx. I don't really want that. It's so time consuming, and there's really too much competition with Zillow, whether it's real or not, but it's there. And so you can't have them sign a representation agreement. So sometimes you just work and get nothing. Waste of time. So I'm trying really to break out of it.
Look into that to see if you can do a representation agreement, because we can in our state, in Colorado, with tenants as well as landlords. Keep looking.
New York is
deeper on that one.
I will see. New York is very tough. I don't know why, but it is. We were told we can't do this and we can't say that.
Right.
I'll check.
That's everywhere in the country now, though, pretty much. So we understand. But look and see that. And let me throw out an idea. You might want to keep your foot or your toe in that market a little bit, with the thought that it will help you stay clear on the market as you're talking to investors. Does that make sense?
True.
Like the
absolutely
is working with the investors, but you might just keep in with the tenants, because then you can tell the investors, hey, I'm working with 10 tenants right now, and here's the situations they're running into.
Yeah. No, you're right. And I will
be a matchmaker, because you got to figure out what is the opportunity. If this market, I know you may not have felt it yet, and you mentioned the multiple offer, but the mega trend, let me point this out. If you were around 30 years ago in the real estate business, or not even that long, 15 years ago, when we had our last recession, the Great Recession. Basically, it happened at different times throughout the country, even though it was a mega trend, right? I mean, some people were talking as early as 2005 that their market turned. Some was '06, some was '07, some were as late as '08. That's a long time, 4 years before they got hit, so to speak, with the fall down. And then, of course, it all fell in each of their individual markets, 5 to 7 years, depending on where they were. And then it popped back up and popped back out. Every market is different, your local market. However, it's hard to get away from a mega trend. So I would try to be positioning myself for that. How can I win? Because when it does hit your market, if it does, when it does, everybody's going to panic. And if you already have a plan and a strategy, you're going to come out way ahead. Does that make sense?
No, definitely makes sense. I know my first go-to is to panic, but I'm not sure. No, it does make sense. As I say, everything is just so time consuming. But I like what you said earlier about the graphs and, getting that empirical data to show people. Here it is, it's tangible.
It makes you feel better, right, Hillary? Because you feel like you have more control or understanding over the situation.
Yes.
Right. You don't feel like you're floating in the wind wherever it blows.
Right. I'm showing it to them. And again, it's not me. I'm not the one saying, do this. The trend is saying it. It's the experts.
It's always better when it's an outside third party's voice. Yeah. And then you can be the voice that's on their side saying, yeah, this sucks. This stinks,
Yeah.
But this is what we got to deal with. So how would you like to go about it?
Exactly.
Yeah. Good point. Well, I can't wait to hear what you do in your market. I like that you're moving towards the investor realm. Again, the other thing to remember is just to stay flexible and open-minded. A lot of times for success, you got to start running down a path. If you don't run, you'll never bump into the next opportunity, right? The next fork in the road that could have been a bigger opportunity than you were originally on. You may have to shift. So you got to keep your mind open to what's going on, but you can't get distracted to the point where you stop running, you stop moving. You got to keep moving.
Exactly. That's the analogy. It's just good to think of it that way. Keep moving.
You betcha, Hillary. Dave, did you figure out your speaker? Did you figure out your microphone? I guess your microphone was the issue. Yeah, I still don't hear Dave. Too bad. I'd like to hear what Canada's doing, especially Toronto. I know they've been having a challenge up there. They were another market that really got a lot of activity over the last couple of years, and they're struggling. So some markets are moving a lot more than others in this boom bust cycle. You got to know where you are and how to adjust to that. And again, if you can show that empirical data to your people, show them the big trends, because they're probably hearing media about the national news or even their local news. They're hearing about all this. So show it, make it more concrete for them so they can make a good decision on this too. And again, do not be afraid. Oh, I can't show this to them because then they won't buy or they won't sell. Yeah, well, guess what? They're going to do whatever they want to do anyway. So just show them the information, give them the advice of what you think based on what their scenario is they should do, and then they get to decide, just like always. All right, well, hopefully that was helpful today and kind of a fun session. As I said, we're going to be recording it. Well, I hope we recorded this. If it does work out, we'll have it posted by the end of the day on a YouTube channel. And again, that's go over to Mastermind Agent Network and then look under the call list, the playlist, and it's going to be under referral mastermind calls. And they do them, I can't remember, I think it's in reverse chronological order. So they do the oldest one first. You're actually going to have to scan down all the way to the bottom to find this one that's the newest one. And then you can also watch or see the video over there on Facebook. We'll be posting it in there in our Facebook group, if you're a member of that, over at Referral Mastermind Call. And again, I appreciate everybody and their participation today. That's what makes these things work. this mastermind. Thank you so much. So thank you to Hillary. Thank you to Vivica. Thank you for Dave for being here. I know you couldn't get your microphone going, but it was good having you here. And really appreciate you all showing up and participating and helping us all get a handle on what's going on in the market. Hope you have a great week and you're very productive. All right, take care. Bye now.
Thanks, Mike.
Thank you, Vivica.
Thank you.
Thank you, Hillary. All right, y'all take care.